Candlestick execution. Learn and trade this simple, powerful, igniting pattern. Dan Gibby has over 30 years of experience trading equities and options and co-founded Master Trader. He's going to teach a powerful WRB breakout combined with a structured 1-2-3 continuation pattern. You'll learn how wide range bars signal institutional conviction, how to time entries with precision, how to apply this pattern on any time frame. Dan, welcome back to the show and thanks for being here today. I think you're on mute.
Yes, I was. Good afternoon. Yep, thanks for the intro. And
You're welcome.
Sounded like a little bit of a mouthful, but we're going to have an amazing session here for the next 45 minutes or so. And I am going to simplify this amazingly powerful, simple setup to trade stock and options on that I promise you I could teach your 8-year-old child in 10 minutes and then with many examples to perfect it. So let's get started. We are price-based traders. I actually define a successful trader as anybody who has a systematic, objective method for capturing profits out of the market consistently. And ours is this. This is a one-page summary. Price is king. We need a setup. Why? We start with a setup and then we add these other concepts that make up what we call the master traders strategies approach. And we use candlestick patterns, and as technical traders, it's a fact. It's not we believe that candlesticks reflect the true supply and demand relationship of all collective market participants. Now let that sink in for those non-believers in technical analysis who, they just want to trade fundamentals, they want to trade Fibonacci's, they want to lunar module changes. No, charts don't lie. A candlestick reflects the open and the close and the high and the low. And we read these candlesticks in relations to a pattern, and that's our starting point. And then we say, okay, well, where is this pattern in connection with the trend, support and resistance, multiple time frame analysis? Is it showing relative strength or weakness? Now, the markets were tanking this morning, and then in our green room, we were trading so many things that were showing relative strength. We're like, look, this stock or ETF does not care about what the broader markets are doing right now. So that's a plus. It still has to go through our filter of all of these concepts before we calculate position size and hit the buy or short button. Volume and moving average, you'll see on my charts in a moment. These are secondary, I don't need them, but we use them in a constructive way to speed up the analysis, as we say. Hey, I got a beautiful pattern. What are the broader markets doing? Right now, they're range bound. Are they trending, pull back to support, or are they in a downtrend? Our market internals. We use what my partner Greg calls a techno-fundamental approach. So we use this technical approach not in isolation, but with market internals that tell us when things get too frothy or bullish or fearful. And we have different levels, different tools, whether we are swing trading or day trading. Like, we nail, for day trading, we nail the tops and bottoms consistently in our trading room. If you don't have proper position and money management, then all of this is in the garbage. I actually was just telling the green room this morning, it's a very sad story. A good friends of mine, neighbors, they were up 3 million on a position and now they're down 3 million. And they asked me about this a few months ago, and I said, do not turn this into a loser. Here's your stop loss. He's like, oh no, I don't believe in stop losses because they hit them and then they bounce right back. Well, they've blown up their retirement account by not using position and money management. Trader psychology, I very simply kind of just describe that as you have to have the patience and discipline to follow your trading plan. So you have a plan, you have an approach, these are the patterns I'm going to trade, this is how I'm going to manage it, and you need the patience like a hunter in a deer stand to wait for that setup. And so you got to manage what I say, the nut behind the keyboard, which is us, yourself. You got to manage yourself with patience. These are all bullish setups. We have many more. And every bullish setup is a candidate for both a stock and options trade. We buy options and puts as what I call directional trade, which means, hey, I'm willing to buy the stock, but let me buy the option because I get the benefit of leverage and limited risk, provided the options are liquid. That's like the biggest problem we have, or else I would be trading so many more options, both long and short. But the spreads they can choke a horse. There's really only like 100 liquid ones. I wish there were more, but I can't change that. What we're going to focus on today, so all of these are bullish. Every single one of these are bullish. And we are going to focus on this pattern right here today. I'm going to make you and your 8-year-old child an expert of this. A bullish 1, 2, 3 continuation. So I want a wide range bar. What's a wide range bar, Dan? It's a big bar with little or no tails, big real body compared to the other ones. Well, I don't understand what that means. Relax, you will momentarily. It's a visual. Then I want one or more inside bars that stay in the upper third of this big wide range bar. We want this big wide range bar to come from consolidation and not be far from the 20 period moving average. Why? Well, look at the title of the presentation. It's an igniting pattern. Igniting. So from consolidation, this is the start of a new move higher. All these charts work identical on the short side. So you have a bearish 1, 2, 3, which is a ugly red bar from consolidation, not far from the 20. And we use this term price void, which means, hey, look to the left, it has room to run. Again, examples, and we'll get through as many. I purposely, I have a lot of slides here. I'm not going to get through them all because it doesn't matter. I could show you 500 examples. So let's start with this. A bullish 1, 2, 3 is a wide, WRB is wide range bar. Okay, so can everybody, including your 8-year-old son or daughter, see what a wide range bar is? They jump out at you. It's a wide range with little to no tails relative to the other ones. There's a wide one, there's a wide one. Well, that is a tail. There's a wide one, there's a wide one. Here's one, here's one. You see how simple that is? I don't need a formula. It's like they jump out at you. So now let's continue. I want a wide range bar from consolidation. Okay, so look at this one. This is consolidation into the rising 50. The 20 MA flattened out, and I have, boom, I have a closing breakout. Now I have one or more inside bars that stay in the upper third. Does this meet that definition? Yes. Does this meet the definition? Yes. It's in an uptrend, 20 above the 50. Wide range bar, inside bar, but in the upper third. Does this meet the definition? Well, you know what? I know one of you are going to say, well, Dan, you just told me, and I'm a good student, but you just told me it had to stay in the upper third. And you know what my answer is? You are absolutely correct. You are correct. It's not an inside bar. But you've got to relax the rules a little bit when the overall pattern, using our concepts from the proper slide, suggests that's an igniting breakout. These are our three moving averages. The blue is 20, green 50, red 200. So if I were to take the candlesticks off the chart, I can tell you with a reasonable, well, it's not reasonable, it's a very high degree of certainty what's going on under the hoods. Now, of course, I can't tell you the candlesticks and the bars and all that, of course. But what I can tell you on this one is I have a rising 200, I have a declining 20 and 50 that are starting to curl. So that picture is telling me it's a bottoming pattern. And now I have a wide range breakout with a 1, 2, 3 from a bottoming pattern. That's an igniting breakout. This one is a continuation 1, 2, 3, right? It already broke out. It's above all three moving averages now. I had a gap reversal, inside bar, again, relatively inside. Don't get anal about it when there's so many other positive concepts. And you would buy over the high of that red bar. You would buy over the high of this green bar. Stop. The initial stop is under the wide range bar until it starts moving as intended, and then you tighten the stop. All right, so this, little Johnny, we've been at this 10 minutes. Little Johnny already says, I got it, Dan, thanks. So we're going to spend the rest of the time on examples. Look at my moving averages here. The GERN, we actually traded, this was last week, you all. This was last week we gave to our subscribers. Sideways trend. All three moving averages are flat. Now, you'll always hear me talk about what happened leading up to the trade that we're trading. Today's session, 1, 2, 3s. So this is what I'm talking about, but let's analyze what's leading up to it. This bar right here looked like a short under the low. Nope, move back up. This bar here under the red bar looked like it was going to go lower. Nope, bounced off the prior low, closed at the high. Is there anything to do right here? No, there's no pattern. It's still in a sideways trading range, nothing to do. But you take note of this bullish price action. Look at the volume. Well, actually this volume was on the igniting, but so this volume was on this bottoming tail. That volume means that when it dipped down, of course, you know, every transaction is a buy and a sell. I get that. But why it's positive is because you had a lot of sellers, but you had a lot of buyers who won the day's range. Kind of, do y'all remember that game you played in high school or college or your first job, where you played tug of war, and you had, you know, team marketing versus the sales department, and they're pulling back and forth, and then who won this was, in this case, was the Bulls. The Bears won at the beginning, the Bulls won at the end of the game. So increasing volume. So here's my wide range breakout. Could you have bought over the high of this bar, stop under the low? Yes, you could have. You just share size it for that, but that's a big bar. I'll let you do the math on your own. You know, just eyeballing 123, you know, the whatever, 57, that's a big bar. So I am monitoring it for exactly, well, in this case, I'm monitoring it for a buy setup, which is a controlled pullback and reversal on support. So that's what this was. I know it's not today's subject, but we gave right here was a buy setup and reversal. This wide range bar, closing breakout, inside bar, that's a 1, 2, 3 to add. We got in down here over the high of this topping tail, but that's a 1, 2, 3, which I just said you can add or buy it. All right, this says page 1 of 2, so I'm going to show you another slide on a smaller time frame. So this, you know, slopping around, you know, not much to do, but here's my igniting closing breakout. Here's my inside bar. Now, can you see by the candlesticks that this gap down this day? Can you see that, right? Because the candlestick measures the open, the close, and the high and the low. So this was the close, and it gapped down into this bar. That's the open. And it recovered and closed at the high. Let's take a look at what the intraday looks like. So here's my guy with a magnifying glass. This is a 15-minute chart. So there's 26 15-minute charts in a day, in a 6.5-hour New York Stock Exchange market hours. So here's my igniting bar. It's just powering higher all day long. That's, oh, where did I go? That is this bar right here. This bar is this. Here's my gap down. Here's the recovery. Here's the stabilization. Here's the closing at the high. So the 1, 2, 3 increases the odds of just buying over the high of a wide range bar. I mean, it should be common sense, but to give you a little meat on the bones, you have 26 more bullish 15-minute bars creating support. And remember, part of the definition, we want it to stay in the upper third of this WRB. Why do we want that? Because if it retraces more than that, If this same consolidation were like down here, well, it should not have done that. It's relative weakness. So you want it to stay in the upper third, bullish consolidation. All right, let's just keep plowing away. I see it, and you know, Greg and I have been at this 30 years. I have hundreds and hundreds and hundreds of examples. So I'm just showing you some recent ones here. All right, look at all these flat MAs. Blasted, pullback. This was a buy setup. This was a buy setup. Closing wide range bar, 2 inside bars. So when we have an additional bar or 2 that trades under a prior bar's low, we call that a 1, 2, 3, 4. So do you remember what I just said about 26 bullish bars per day on a 15-minute chart? Well, guess what? Now we have 52 bullish 15-minute bars. So it's creating a bigger base of support that holds a bullish retracement into this igniting bar. Does that make sense? I know you all can't talk, so I'm just talking out loud here for you. So the entry on this is over the red bar. So this was a, you know, all these are real trades we give subscribers. So you calculate the position size based on enter over these highs, stop under this red bar, and in our trade sheet, it's totally hypothetical. We just throw in there, look, I'm going to risk $300 a trade, and the Excel spreadsheet spits it out of how many shares that you can risk, where if it hits the stop, you've hit your $300 max loss. If you want a $50 max loss or 3,000, you know, that's your own personal trading plan. And so this thing just look, it didn't even trade under a prior bar's low. So this was such an easy management. And you know what? This is what we call a wide range ending bar, far from the 20 period moving average. Just sell it. Could it keep going? Of course it could. But in our experience, you know, we're in this with, you know, whatever percent gain that is. And it would have been okay to sell half and then put a stop under the low and then trail manage it that way. Nothing wrong with that at all. Let's keep going. Many examples. So I got my 20, my 50, deep retracement. It went up and it's consolidating. Wide range breakout. But see, this one's at resistance. So I would not buy over the high of this bar because of, look to the left. It's resistance. The reward to risk is out of whack. But I now have 3 inside bars, and the 4th one even took out the low of this 3rd bar. Closing breakout. So now you can buy over the high of these inside bars. This is a closed trade. We in the members area, we show all open and closed trades for subscribers. We have 3 different advisory letters. This is the swing and options trader. We give them the date, the symbol, whether we're trading stock or options. We always give the technical setup. 1, 2, 3, 4 breakout at the 50 period moving average, right there. And then we give trade management in between. So we sold a quick third, we give a target for the next one, and then we go into trail mode, you know, almost 10% return, and this is a swing trading service. And we trail stopped out of the back half there under prior bars low. Uptrend, 20 above the 50, above the 200. Remember I said we always look at what's leading up to it? So this was a bearish gap down. That's ugly, ugly, ugly gap down under all of that support. That suggested lower. Nope, snapped right back. This is actually a bull 1, 2, 3 right here that triggered right there. But the initial stop on a 1, 2, 3 or 1, 2, 3, 4, whatever, is under the wide range bar. So if you did buy that one, it went against you, but your stop's here, you're still in it. Now you have another wide range closing breakout. 2 inside bars. You know, we trade pictures where you've seen, you know, I joke about this Halloween movie, you know, Freddy Krueger or whatever, Halloween. And, you know, I say Halloween part 89 because when you see the girl at 2 in the morning after drinking, wander into the kitchen, and you hear the music playing, da 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 da, everyone knows she's about to get her throat slit. Okay, it's not, you know, it's not magical. So when I see patterns that I have seen so many times, and I'm adding the information that's leading up to it, this now, I mean, I'm 99% confident over the high of these bars, it's going up. Now, does that mean that if I buy it here, it won't gap down here to $84 the next day on negative news? Of course not. I'm not that naive to believe that, or to mislead you to believe that. But we are pattern traders. So when you see a high probability setup, you calculate position size and you hit the mouse and you enter the position and you manage in between. It's that simple. All right, so this is a mess. This is a mess. We don't trade messes unless we're selling credit spreads under support or above resistance. Right here was our wide range closing breakout. There's my inside bar in the upper third. Look to the left, there's no resistance. That's when we entered. You know, we just trailed this thing. We sold the gap up, made 29 points. Here's the history. You can read through everything. That's another closing trade, 10-day trade. You know, that's what we do as swing traders. This is an igniting gap. Probably earnings, or, you know, not earnings news, but who the heck cares? But on a gap this big, far from the 20, what am I going to do with this thing? There's no pattern, there's no setup, there's no reward to risk, there's no nothing. But you can monitor it because it's a bullish igniting gap, and you know, cleared all this, and now all the moving averages are up. So you monitor it. Sometimes I monitor things for a month before I find an entry. And many times I get to a point of monitoring and I delete it. I'm you know, I'm gonna stop watching you. All right, so this was a little breakdown failure. Here's my igniting. This is a closing breakout. What does closing breakout mean? It means the closing price, ignore the tails. The closing price is above all these other closing prices. This is what we call a price void. Every trade we take for longs You look to the left, and there has to be insignificant resistance to allow it to move higher. What does that mean, Dan? Momentum moves lower like this. Look, it's just fluid down, 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 down. That's fluid, and there's no overlapping bars, congestion, speed bumps. So this has a much higher probability of moving higher because of the fluid move down. So here's my wide range bar closing breakout. Here's my inside bar. You buy over the high of those two bars, which was on this bar right there, and manage in between. Look, 1, 2, 3 breakout after bullish turn at the 20 MA. It's right there in black and white. 2 days, 2-day swing trade. And there are the results. You know, Greg uses this term. It's the same but different. And what we mean by that is, look, you're not going to get the identical setup every time. And so just throw whatever you want at me. Throw whatever you want at me. We teach you the tools to recognize the price action and say this is the same. It's just a different red or green bar to the left. This one, it's in a downtrend. It had a bearish gap, which suggested lower prices. Bullish close. Is that a breakout bar? No. No, it's not a breakout bar. But it went deep into resistance. Now I have an inside bar. Now I have 2 inside bars. That's my breakout. And this is my big void. I got a huge void into the gap fill. Same but different. Going flat here for 2 months, wide range igniting. I got 4 inside bars. There's my 1, 2, 3, 4. Same but different. There's a daily chart. Bottoming pattern. Igniting, inside bar. Would I have bought over the high of these 2 bars as a 1, 2, 3? You better believe it, I would have. But this additional bar that traded under this bar's low and snapped right back makes this better. I got my price void. Look to the left. Here's my bottoming action, building support. You buy over the high of this bar, stop under the low of this bar because it's a correction bar. Exploded, you know, too extended. I'm not doing anything. Here you go. It came in, it's bobbling around on the 20. Wide range up, 2 inside bars. You're in business. We bought call options on this, made 900 bucks. Look, that's a $2 stock. I don't care what the price is. I don't care what the instrument is. I don't care what the time frame is. These patterns we teach apply to anything. Uptrend, 20 above the 50, above the 200. Wide range closing breakout, 2 inside bars, 1, 2, 3, 4. You see what I mean? Same but different. It's just when you see these, they're high probability trades. This is one of my favorite setups. Does it apply to the downside? Of course it does. Look at my downtrend here. Look, here's my wide range bar. Here's my bear 1, 2, 3. Here's my bear 1, 2, 3, 4. Here's my price void. It's the same. Bear 1, 2, 3, 4 continuation after sell setup at the 20. Here's how I'm going to manage it. We held this 7 days, trail mode. Easy to manage. Here's another one, downtrend. Look at all the moving averages. Breakout failure, closing breakdown, inside bar. Look to the left, there's no support. It's a no-brainer short. Now, you need Greg's course to get the confidence of having the objective information. And then just like any profession, doctor, basketball player, mechanic, anything. Once you get the objective information, I mean, you can hear it in my tonality, and the folks in the green room also do. They're like, "Oh, Dan, I heard your tonality, and I've learned that that means you're more confident of this trade." And it's like, you better believe it. When this thing gapped down right here and took out a 5-minute low, hit the friggin' short button or buy liquid puts. I am so confident of this pattern. But that comes from two things. Number one, objective information. Number two, experience, which I call seasoning, but they're synonymous. You know, I'm a private pilot. You know what? I only have 225 hours. I am such a novice. But I have the objective information to fly my plane to Key West whenever I want. All my commercial pilot friends have 40,000 hours. They have the seasoning. I don't have seasoning, but I have the objective information to fly the plane. Closing breakdown, inside bar, nothing to the left. It's just a no-brainer short, you all. Come visit us in our Master Trader live trading room. You've heard me mention it a few times. We purposely have a no-brainer trial. Spend $7. You get 5 days with us. Not 5 hours, 5 days. So I'm showing you these charts. Hopefully you're learning a lot in a short time. But here is where you will watch us walk the talk in real time. We are scanning for these things. We're managing trades. We're constant education. We're hitting the button together in real time. We're anticipating trades like we did this morning, both on the top and the bottom of the spiders and Qs. Like, get ready, get ready. If this happens, get ready to hit the button. It's exactly what we did today. Closing breakdown, 2 inside bars, nothing to the left. It's just a no-brainer. I mean, that one, look, we bought puts because they were liquid instead of shorting the stock. This is an intraday chart, 15-minute chart, wide range bar, inside bar, nothing to the left. But this one didn't trigger, but it would have been fine. 1, 2, 3, that one triggered. 1, 2, 3, that one triggered. So they apply any time frame. So this was a 1, 2, 3, and a big topping pattern, head and shoulder. So I got my downtrend, I got my retracement, I got my consolidation at the declining 50. And look, wide range bar right here on support. This is my price void. Momentum move up. There's no congestion. There's no pivots. There's no nothing to prevent this. And it's coiling here. It's coiling. You short under these lows. So here we go. AIZ, short the stock. No brainer. We made 20% return 3 days. Igniting gap. Again, I don't care the reason. Who the heck cares? But it's a closing breakout. But it's up too much for me. It's not my personality to buy something that went from $75 to $94. So I watch it to rest. Well, here you go. I got 4 resting bars. Now I'm ready to buy it with a stop under this bottoming tail, which is a 1, 2, 3, 4. Does this make sense, you all? I mean, once I'm giving you the objective information, but you know, when you're in our green room and you see the seasoning, I mean, we pounce on these things. So this kind of gives multiple time frame example, but here's my 1, 2, 3, 4 on the daily. But on the weekly and monthly, remember on the first page, multiple time frame analysis, this is a perfect example. I got a double bottom on the monthly, and I got a 1, 2, 3 on the weekly. So I got a big target on this thing, maybe $35 even. This is something we started a couple months ago. If you want to scan this, it's totally free. We don't need anything from you. It's just a Telegram channel where we give you trade ideas, interest, market updates. We just throw interesting things at you. You can scan that, and it's just a great little Telegram channel. All right, we've got a couple minutes left here. Look at this, just no brainer. Downtrend, topping tails were attempted breakouts that failed. Closing breakdown, 2 inside bars. It even in the allotted time here, you all, 40 minutes. I hope you can appreciate the high probability setup that you're looking at right now. And if you don't, then it's okay. It's just back to you need the objective information even more in a structured course, and then the seasoning. I mean, look at this. Came down to a retest with a 180 and an inside bar, price void. You just hit the mouse. So that we use TC2000 for scans, and this is a 1, 2, 3 scan. That's where I found this one. Look, JHG right here, JHG. You pull it up, you look at it, closing breakdown, 1, 2, 3, price void, you hit the mouse. We sell options on turning points as an income trade. So all these patterns on bullish 1, 2, 3s are candidates for selling a put spread under the wide range bar, call spreads above the wide range bar. This was, I think, last month, 66 trades. You can look at it here, but $5,600. All right, let me just conclude here with our beautiful special for you here. My partner Greg put together. So his Master Trader swing course. And this is our 1, 2, 3 bundle for you. This is the starting point to make you objectively understand price action patterns, everything. This is a beautiful top-down course how the stock market works. So regardless of your expertise, you can share that with your 8-year-old child also. The 1, 2, 3 continuations. Full swing trading course, and 3 months of our advisory swing and options letter, free coaching and scans.